Okay, so this week, Wall Street's biggest names stepped up to the plate for earnings, and let me tell you, the results were all over the map. So the big question is, who totally aced the test and who's maybe getting a note sent home? Let's dive into the report card.
I mean, this quote really just nails it, doesn't it? It perfectly captures the vibe of what just happened. Think about it. The global economy is the classroom, and the CEOs are the students, each one walking up to the front to present their latest multi-trillion-dollar project. It's the perfect way to frame this whole thing. So, with the stage set like that, let's meet our star students. These are the ones who didn't just do the homework, they came in ready to completely blow the curve for everybody else. First to the podium is JPMorgan. And you know this kid, the one who's always over-prepared. They've got the color-coded binder, the perfectly rehearsed speech, and an extra credit project that just puts everyone else to shame. And for their show and tell, they just casually unveiled a quarterly revenue figure that's bigger than the entire GDP of some countries. The source material called it the volcano that actually erupted, and that's exactly what it is, a massive financial force proving JP Morgan is just playing a different game.
Now, what's really fascinating here is the strategy behind these huge numbers. Sure, high interest rates helped a lot. That was kind of the easy part. But look closer. The real story is the explosion in investment banking and corporate lending. That tells you that after years of everyone being a little hesitant, the big money deals are back on the table. And JP Morgan isn't just riding that wave, they're creating the next one with this new $1.5 trillion investment plan. That's a huge bet on future growth.
And of course, you still had CEO Jamie Dimon get up there and warn about all the economic problems on the horizon. But as this quote points out so brilliantly, it's kind of hard to square the cautious words with their record-breaking actions. It's a classic Wall Street move, right? Warn everyone about the rain while you're busy building an ark out of solid gold. Okay, let's shift gears to our next presenter, who came in with a totally different kind of energy. This is Morgan Stanley. Think of them as the sharp, lightning-fast debate team captain, ready to win you over with a super powerful and persuasive argument. And they absolutely delivered a knockout presentation. Just look at this, a 45% surge in profit and an 18% jump in revenue. These aren't just good numbers, this is a statement. This is Morgan Stanley reminding everyone that they are a dominant force, especially when the markets get messy. So how'd they pull it off? Well, this is the core of their argument. Their equities trading desk was just on fire, perfectly navigating all the market swings. And just like JP Morgan, their investment banking fees went through the roof. It shows they're not just managing wealth, they are absolute masters at creating it out of market momentum. And this right here, this is their entire philosophy in a nutshell. While other people see a volatile market and run for cover, Morgan Stanley sees an opening. They actually thrive in the chaos. For them, a market that's swinging all over the place isn't a problem to be solved. It's the arena where they have the home field advantage. And that brings us to our final student, the one who's been kind of quietly watching from the back of the class this whole time. This is Bank of America, and they're about to prove that sometimes the quietest students have the most impressive projects of all. This slide is great because it shows what makes Bank of America so uniquely powerful. It's a true hybrid. On one side, you've got the reliable Main Street bank we all know, right? Card spending is steady, deposits are stable. But on the other side, it's a Wall Street deal-making powerhouse with investment banking fees that shot up an incredible 43%. And the crucial takeaway here is that Bank of America has somehow mastered two totally different worlds. In high finance, being a jack of all trades usually means you're a master of none. But they've proven you can be both a stable, practical consumer bank and a high-flying, profitable investment giant. That is a really rare and incredibly resilient combination. All right, we've heard from our 3-star students, we've seen their projects, we've heard their arguments, now it's the moment of truth. Let's get to the final report card and see how they all stacked up against each other.
Okay, let's break down these grades. JP Morgan gets the straight A, no surprise there. It's still the gold standard, the benchmark that makes everyone else look like they're just trying out for the team. Morgan Stanley gets a strong A-. They came in with a lot of swagger and totally backed it up with huge trading wins. And Bank of America gets a very well-deserved B+, the underrated overachiever who's quietly crushing it on all fronts, proving that substance can be just as impressive as style.
So that's the individual grading. But what happens when we zoom out? What does all of this, all the revenue, all the deals, all this confidence,
actually mean for the rest of us, for the broader economy? After a week of presentations like these, what's the collective message coming out of Wall Street's classroom? What's the one big lesson we should all be taking away from their massive show and tell? Well, the first and probably most important message is this: the era of hesitation is over. For the last 2 years, the main theme from Wall Street has been caution, a real wait-and-see approach. These earnings reports, they signal a huge shift. The big players aren't waiting anymore, they're actively investing and making deals. Confidence is officially back. And that leads to a second really crucial insight. Banking isn't back because, let's be real, it never actually went away. The engine of finance was always running under the hood. It just stopped revving so loudly for a while. Well, now, the bragging is back and everyone can hear it.
And that right there is the ultimate takeaway. This final quote just says it all perfectly. This wasn't just some classroom exercise. Their performance isn't just a grade on a report card. It's a powerful signal about the health and the direction of the entire economy. And the story they told this week suggests the forecast is looking surprisingly bright.